parties. Yeah, it does not include what, my dear? Correct. Associate and joint venture are not part of the word group. It will never come. It is only holding and subsidiary any day. Yeah. See, first and foremost thing, which is very easy, that is only the topic. I mean, within this topic 4, actually 4 situations can come. Okay. Before going to 4 situations, I give you 1-2 minutes time. You should go back to the first day of SBP. We had discussion what is SBP arrangement, what is SBP transaction, equity settled SBP, cash settled SBP. Do you remember? Yeah. Can you just revise it once? Because here what happens, holding point of view it may be cash settled, subsidiary point of view equity settled. Got it? That identification, if you don't know definition, your identification go wrong. If that goes wrong, journal entry goes wrong, entirely loss. Fine, just revise it 2 minutes. Yeah. So what is that you revised, my dear? Is first one is SBP arrangement. Arrangement means agreement. Agreement between two parties. First party is the entity or group entity or shareholder of any group entity, and the other party can be employee other than employee. I mean any other supplier who is entitled for shares of the entity or the group entity or cash or other assets based on the share prices or option prices. Correct? That's it. Next, look at the next one, share based payment transaction. Yeah, when do you say it's a transaction took place? When you received goods or services and yeah, you have got an obligation to settle it. Correct. Next point is what? You have not received goods or services, but you have an obligation to settle it. That time also we will see. Correct? Right. And equity settled SBP. Equity settled SBP is where you received the goods or services and you have to give the shares or share options. Correct? Na? Or you received goods or services, but you are not obligated to give anything because it may be settled by holding company. I got it free of cost. I am not liable. Then also it is equity settled SBP. Correct? Na? Right. And the next one is what? Cash settled SBP. Cash settled SBP, what do you say? Obligated to give the cash or other assets based on the share prices of the entity or group entity. That's all. Correct? Right. That is the point. Yeah, what do we do with respect to those few lines? Shall we write now only? We'll write it. Otherwise, again, I'll forget. Fine. Yeah. You can cut this line only and write it and then later write same heading. I'll dictate you. If the option, this is continuation to third topic. In third topic, we have done the accounting when the option is with the employee. Correct? Na? When the option is with the employer, company, what should I do? Right. Note down. When the option is with employer or the entity. When the option is with employer. Right. Few lines I'll just give. Bit explanation yesterday it's completed. Yeah, what do we do? You do remember anything? We'll account like this, cash alternative separately, SBPR separately? No. We don't bifurcate it. We will be deciding. What is it we'll decide? It should be fully cash settled or it should be fully equity settled. Correct. Any one company only has to decide day one. Accordingly, you start accounting. Correct? Na? Right. Please, first point. The entity should account either as cash settled SBP. First bullet point. The entity should account either as cash settled SBP or equity settled SBP. Yeah. In deciding the same, next point, in deciding the same, it needs to consider the following. It needs to consider the following. Yeah. Sub bullet point 1. Yeah. Intention to settle in cash or equity. I mean, their intention, that is more important, because what is their intention, that they'll do. Intention to settle in cash or equity. Next sub bullet point, all sub bullet points, main bullet point till I say. Okay, na? Right. Past practice. Next, ability to settle in equity instruments. Ability to settle in equity instruments. Yeah, that is legal restrictions. Agreement with lenders. Or other owners. Etc. Okay, right. Next main point. Yeah. If they have clearly stated that their intention is to settle in cash, if they have clearly stated that their intention is to settle it in cash, right? Hyphen will follow cash settled SBP. We follow cash settled SBP regardless of past practice. Regardless of past practice. Regardless of past practice. Right. Next bullet point. Have you understood our line? Once they say cash may will give, clearly stated kia, then that's all, it's cash only. See, when you want to give cash, problems are not there. Correct? No owner will tell you like, see, I joined your company. You people all requested me, sir, please you also fund. Fine. 40%, I invested money for 40%. Now tomorrow you people 60%, I know. You people are 60%, I am only 40%. Tomorrow you people start issuing to equity shareholder, employees ko shares issue kiya to automatically my 40% will dilute or not. That's why first day only I told, no further issue of, I will join you, but no further issue of equity shares. That is problem. Already you entered into an agreement with me. Restrictions, something will be there. Correct? But if they say cash, no problem. They worked hard. They achieved the targets. We are paying them money. Right? If they give equity, means you have to consider all about whatever we told. Yeah, note down. Yeah, if they state the intention to settle, in equity instruments, right, one needs to consider the above points. One needs to consider above points. Even though they state, still we have to correct. Simply you must have told. Law it is not permitting, agreement is not permitting. How come this fellow will give? Agree or not? So he cannot give. That's why we have. If it is for cash, no condition, nothing. Any day they can give cash. That means he may try to say first equity, later last. Company has an option. Either can settle it in equity or cash. Last minute may he'll say, sorry, I'll give you in cash. Close. That's all. right? See, first initially you must have made what? SBPL, if it is a cash settled. Last minute mein what you must have done? You must have issued shares or vice versa. Initially you must have made SBPR. Last minute mein you must have settled it. Then what do? Some small accounting, shall we not make small thing? Nothing great actually. Just write it so that you will revise it later. Yeah. So initially accounted, separate points. Initially accounted as equity settled SBP, but settled in cash. But settled in cash. Yeah. What do you write, my dear? Simple journal entry. Tell me what you have already created so far. That's all. What are you paying? Cash. That's all. SBPR account debit. To cash. Yeah. If you are given any, what do you say? Sir, SBPR, to how do you create none? First of all, based on the granted date fair value or not? Correct. But cash settlement, when it is happening, you will take today rate. Agree or not? Yes. So then it will be, it value of it may be going up and down. Agree or not? Yeah. So if you have paid more money or less money, it should be adjusted to expenditure that day. Right. Make a note. If amount paid is greater than, if amount paid is greater than SBPR, if amount paid is greater than SBPR balance, record the additional expense in P&L. Record the additional expense in P&L. Okay. If you pay less, no, what will happen? Retained earnings को transfer कर. That is normal. Na? You want to write that also. Na? If it is paid less, if it is paid less amount, remaining SBPR transferred to RE. Remaining SBPR is transferred to RE. Got it? Yeah. Next. Yeah. Initially accounted as cash settled. Next side heading. Initially accounted as cash settled. Initially accounted as cash settled, but settled in equity. But settled in equity. Yeah. Journal entry, please. Simple. SBPL account debit. Because it's already at market rate only, na? Correct. SBPL account debit. Correct. Equity share capital to security premium. Debit to equity share capital to security premium. Here excess less will not come. First one only excess less possible because cash settled में fair market value on the date of settlement तक लेना ना. That's the point. Here shares only na giving. Number of shares already fixed. A number only I'll give it to you. So whatever SBPL is there, that only to the extent of face value. Equity share capital, remaining amount sit under security premium. Got it? That's all about. I mean, why have I dictated this? Suddenly, by chance, by mistake, if they ask you, you should not say that I don't know. That is nothing actually. Yeah, I suggest you 1 minute, just read through whatever you wrote. Just 1 minute or 2 minutes, whatever you wrote just now. Just read through, that is good for you. Yes, my dear. Have you read at least one round? Yeah. Topic number 4, SBP transactions among group entities. Group means holding and subsidiaries, not, it is not associate or joint venture. Okay, done. Now, here subtopics actually 4 will come. But out of the, I mean, all 4 are easy, all are 2 minutes, 3 minutes concepts, not much timing. Yeah, first thing, so I told you subtopic. Yeah, you write here subtopics, 4 subtopics you write, 4 subtopics. We have got 4 subtopics. Yeah, see here, SBP, first is topic number, some is point 1. SBP issued by subsidiary. SBP issued by subsidiary. But as per the agreement, it will be settled by the holding company. Holding company directly will give the shares to you employees. Middleman, I will not be there. Got it? Got my point? SBP entered by this holding company. Employees will get the shares of who, which company? Holding company shares will come, not the subsidiary company shares. Hello, understood? Holding company will get you the shares. They own their shares to employees directly. Correct? Now, listen first, afterwards you write. Okay, what will happen in this case? Tell me. Yeah, I'll write like, say, example, holding company. This is subsidiary company. Yeah, here you are employee. Yeah, employee will be working to for whom? Subsidiary. Correct. Now, equity shares to given by, yeah, equity shares will be given by holding company. Whose equity shares? Holding company's equity shares only will give. Now, simple thing. Decide first for whom it is what. Yeah, for this subsidiary, what is it? Equity settled SBP na or cash settled SBP na? Or nothing. Yeah, just waiting so that you will decide. First, is it SBP arrangement? How SBP arrangement? Arrangement between entity and employees, or group entity and my employees? Even, correct? I arranged or they only arrange, it actually doesn't matter. There is no big difference. Agree na? End of the day, employees will be entitled for either shares or cash, whatever it is. Correct? Done. Next, is it a transaction? If it is a transaction, we'll record it. For subsidiary, what is the transaction? Yeah, have you received goods or services? Then is it transaction or not? Over. Right. What about H company? Is it a transaction? This is SBT. Okay. Is it share based payment transaction? Is it transaction for H? How? Even though you have not received any goods or services, you have got an obligation to settle in your equity shares. Correct? Agree or not? That's all. So, in the given circumstance, are they giving equity shares? Or are they giving cash? Equity shares. So, that's why this is equity settled SBP for holding company. It is equity settled SBP for even this company. Agree? Right. Now, tell me, S company, what do you record? You received goods or services? Correct na? So, you will record goods or services or employee benefit expenses, whatever accordingly. Okay? Right. To what? Yeah. I mean, generally, first you will make it SBPR kar do. Last minute may transfer it to capital reserve. First, employee also should be there with you, 3 years or some 2 years. Hello, correct? So you can make it SBPR or something like that. Later, E number will be transferred to capital reserve. Why capital reserve? Free of cost. I just got the services, 1 rupee I am not liable to pay. I should transfer it to equity. Equity, SBPR cannot be for lifelong. SBPR is only for certain time. Capital reserve can be for lifelong. Correct na? It is somebody's contribution capital and they did not expect anything from me. They are good guys. Okay na? That's all. Okay. What about H company, Nanna? H company is giving equity shares or not? You are giving equity shares, to end of the day equity share capital will come. First initially you will also be making SBPR, you will make it. Later you will transfer it to equity share capital, security premium, etc. Agree or not? Debit what? Investment in subsidy or employee benefit expense? First, employee benefit expense, can I record or not? Huh? No. Why no? They are not serving for you. They are serving to the subsidiary. Agree na? But isn't it investment to you? You are actually contributing without taking share. Yes, we will say investment in subsidiary. Investment in subsidiary account debit to SBPR. Later SBPR to equity share capital takes place. Hello, understood? Suppose we are consolidating, sir. We are preparing consolidated financial statements. Correct na? Consolidated financial statement में parent company में investment in subsidiary will come. Yeah, E side capital reserve will come. Correct na? Knock off. Agree na? Just knock it off. Job is over. Yeah, as a group, we are receiving the services from the employee. As a group, we are liable to, you have to give the equity share capital or something. Agree? Yeah, capital reserve will go off. SBPR will continue na? Whatever I made will be knocked off. Whatever they made will continue. End of the day, it will happen. Got it? That's it. That is topic number 1. Yeah. Second topic, what can happen? Topic number 2, subsidiary only will tell, I will purchase the shares in the market and I will get you. Whose shares? Holding company shares I will buy in the market. I am not requesting them to give it to you. Situation number 1, I will enter into arrangement with you. I will only settle it. Okay. For that, I may go and get the shares in the market, open market, or I may request my holding company, they do the shares. They gave. Yes, I will give it to you. Hello, understood? Now tell me, alright. Concept is, I think, question clear? Alright. Again, I will write holding company, subsidiary company. Entered by the subsidiary company. We entered into the transaction. And who will be settling, my dear? We will only settle it. Yeah, but in settlement, mein, what do you give? Do you give our own shares? Our own shares, other shares? H company shares. H company shares we will give. H company shares. Yeah, whether we get it from the holding company or whether we buy it from the open market. Hello? 2 choices are there, 2 possibilities are there here. Alright, tell me first possibility. First possibility क्या बोलेगा? Bought in the market. You bought in the market. Share market में you purchased. Share market में holding company shares available. You purchased it and you gave it to employees. Matter close. Right. Tell me now, e situation में subsidiary books में what do you first subsidiary का equity settled, cash settled. Decide first. Question clear? Equity settled. Why equity settled? Definition bolo. Tell that as per this wording, this is sir. I agree to you. Anytime, correct na? Yeah, they are receiving the goods or services. Nah, its own shares. Equity settled means it should be your own shares, not someone else's shares. Someone else's shares you are giving means other assets, not cash, other asset. But anyhow, cash or other assets is equal to cash. Correct. You will purchase in the market, na? That means cash. That's all. Correct. If you, unless until you give your own shares, otherwise it is not a equity. Okay, na? Here, what is it? It is not equity settled. It is cash settled. Agreed? Huh? Now journal entry bolo. Subsidiary books. Think again. Think slowly. Situation clear, na? Shall I repeat question situation once again? Not required actually. Huh? Slowly think. Will come. Obviously, debit, credit, two things only. First thing, have you received your goods or services or not? Correct. Now, first debit karo na. Employee benefit expenses account debit. Two. Is it cash settled or equity settled? And then SBPL. That's all. Correct. Na. When you purchase in the market, what do you do? SBPL account debit. Correct. SBPL account debit to cash. You will purchase. Correct. Na. You will purchase the share in the market. A share physically handing it over to you will not be accounted for. Are you recording investment in holding? How come subsidiary purchase equity of holding company? You can't buy only first. Agree na? Sir, handing it over ko kuch nahi. Because I already booked as expenditure, employee benefit expense book kiya, investment nahi book kiya. Correct na? That's all. I'll buy it. For buying, cash is spent. Job is over. Whatever I gave, I distributed to you. For distribution, no journal entry will be there. Okay na? Because already I told employee benefit expense given. Over? Right. Tell me, now what is in the parent books? For parent company, is it cash settled, equity settled, nothing? So, nothing. No journal entry. Correct. Now, they are no way involved. They didn't donate 1 rupee also to me. I only purchased in the market. Correct? Sorry. This situation. No? Next situation, I will tell you. Okay. What is next situation? They gave me shares. I gave it to you. But actually entered agreement between you and me. And promise that I will only settle it to you. Not my parent will settle. First situation is what? I entered. First day only I told. I will not pay. They will pay. Correct, na? Now tell me, Nana. What I say? We got shares. We got shares from whom? From a holding company. A holding company. Undistributed. Distributed. Now tell me, holding company, subsidiary company books में क्या? Cash or equity या? Cash or equity या? Why equity? Why you say no liability? You only have, you are supposed to settle it, na? Free of cost you are getting means capital reserve donated by your parent. You have an obligation to settle. Okay. No, but I have not decided anything. For your question, I answered. That's it. Tell me. You think. Equity settled, cash settled. Other companies' shares we are giving. We are not giving our shares. Okay. Other way, can't I say, to counter your question, what is your cost? You got the goods or services. Freely mil gaya. Because you didn't pay 1 rupee also. Have you paid? No, they gave shares. Our shares I gave it to employees. Correct. So why not it is equity? Simply obligation means what? Get and give, correct? That is not an obligation, correctly speaking. Agree or not? They will give, that I will give to you. Actually speaking, I am not settling. They are settling. Correct. If they don't give, still you have an obligation to settle. But end of the day, no. But the arrangement is there. Like holding will give me, then I'll give. It is not like all of a sudden happened. Arrangement. Very clear arrangement. Tell me here, what do you say? I'll take it as a SBPR reserve because end of the day, your cost is nothing. Freely you are getting the services. Correct? And you will say it is a capital reserve end of the day. As SBPR, I mean equity settled, I mean to say determination. SBPR will be transferred to capital reserve. End of the day, you didn't pay 1 rupee. Next, what about holding company? Same thing, investment in subsidiary account debit to, they are settling in, yeah, equity. Correct, na? Right. Suppose if they give cash, cash I will give it to you. Question clear? Arrangement with you, they will give me money, money I will give it to you. What is to me? Equity settled for a subsidiary, cash settled for holding company, parent company. He's saying. What about you? For whom? For holding company, cash settled because at the end of the day they are paying the cash. Hello, correct? Right. What about subsidiary company? We are not giving whatever they gave. You are giving. You are not taking from your pocket 1 rupee also. For you, end of the day, freely services received, no ma. For you, equity settled. For parent company, it is cash settled. Hello, correct? Like this, my dear, these are the probabilities, not probabilities. I am not creating probability. All probabilities are there. Okay, the worst problem, those probabilities are not mentioned in the ICA textbook correctly and questions also not given. Not required. First one topic correctly if you understand, all fine. Okay, right. Chalo. Topic one by one will just, I'll dictate and you write it. Yeah, subtopic one. Subtopic one, parent issues its own equity shares or options. Its own equity shares or options. Parent issues its own equity shares or options directly to employees of subsidiary. Directly to employees of subsidiary. For the SBP plan issued by subsidiary. For the SBP plan issued by subsidiary. Plan is, and I told you this very clearly. I entered into an agreement. Under agreement itself, we say holding will give you. Correct, na? Right. So first side heading, subsidiary books. Subsidiary books. Tell me, my dear, subsidiary books, what do you record? Yeah, below you, right? We are receiving goods or services. Receiving goods or services, but not obligated to settle. But not obligated to settle. Hence, equity settled SBP. Hence, equity settled SBP. Yeah, journal entry, goods or services or employee benefit expense debit. Goods, say you got a land account debit karenge, that's all. Correct, na? They gave you land, no problem, whatever you get. Goods or services or employee benefit expenses account debit to capital reserve. You're in subsidiary books. Yeah, to capital reserve or other equity. Other equity in the sense any other reserve, that's all. Standard will never tell you what is that? Capital reserve code ले लो. If you search Control F किया तो 102 में word है, you will not get. It is normal. That's all. Okay na? Next, holding books. This till this level, I hope you understood na? Right. Holding books, parent books. Yeah, parent. I mean, parent has an obligation to settle. Parent has an obligation to settle. Settle the plan. Settle the plan by issuing its own. By issuing its own shares or options. By issuing its own shares or options. Yeah. Hence, equity settled SBP. Hence, equity settled SBP. Done. Now, investment in subsidiary account debit. Investment in subsidiary account debit. Yeah, adi star mark. On the above journal entry, capital reserve mein star mark. Below journal entry, investment in subsidiary star mark. Okay. Yeah, 2 equity share capital, 2 security premium. 2 equity share capital, 2 security premium. Okay na? Right. Look at this question, my dear. Question number 29 related to e topic, subtopic 1. This was asked in RTP May 2021. RTP question. Examination maybe I think they asked once. Easy, 4 marks. 2 journal entries, 4 marks. Company P is a holding company. For B, there is subsidiary. A group share based being organized in which parent is issuing its own equity shares to the employees of company B. Correct na? Parent is only giving. Yeah, the details are as below. Number of employees of the company B, 100. Grant date fair value. It is equity settled na for both of them. Grant date fair value only relevant. Correct na? See, I hope you understood na? How you decide accordingly journal entries will be there. Our classification correctly won't happen. Then entirely loss of time and marks, everything. Okay, that's why you should be careful. Our 4-5 definitions are there. First, whenever you want to enter into 102, mandatorily 2 to 3 times revise karo, then you enter. You will feel comfortable. Okay, right. Right now, number of shares to each employee is equal to 25. Vesting conditions immediately. Immediately means no vesting period. SBPR concept not required. Direct accounting will be done. Okay, cool. Pass the journal entries in the books of P and company B. What is the same journal entry na? Amount tell, that's it. 100 number of employees into 87 into 25. That's all. Our number. Journal entries will be same. You write na? Question number 29. Same journal entries. 2,17,500. $2,17,500. Even one question of question and answers may be thana. Just touch that also. 1 or 2 questions were there. Topic 4 करके लिखा yesterday question and answers में. First you finish this. We'll have a look at. My dear, when you're writing an exam, don't just write only 2 journal entries and come. Okay, now you have to write that. Holding company, equity settled SBP, for them, this one, then you write. Hardly 4 lines or 5 lines, so you'll write. He will give 4 marks. If such kind of question come, 4 marks will come. So you expect a lot. Simply 2 journal entries you write and come. You wanted 2 plus 2 marks are no, not possible. Dangerous to you. Got it? Depending on the marks also, you try to give. Fine? Yeah. Please go to question number 14, man. We'll see, just have a look. Same thing only. Answer is already given. 14, 15 are topic number 4 related, which we noted yesterday. A parent grants 200. Yeah. Page number 43. Yeah. Parent grants 200 share options to each of 100 employees of the subsidiary. Condition that the completion of 2 years of service with the subsidiary. Fair value of the options on the grant date 30. At the grant date, subsidiary estimates 80% of the employees will complete the 2 years of service period. Okay, the estimate does not change during the vesting, means same number will continue. At the end of the vesting period, 81 people complete the required 2 years of service. The parent does not require the subsidiary to pay for the shares needed to settle the grant. I mean, no payment, nothing. It's free for me. Correct now. Freely services I am receiving. Pass the necessary journal entries. What do you do? Y1 SBPR, Y2 SBPR, correct na? Yeah. Afterwards, actually 81 people have completed the, I mean, 80 for the first year, 81 for the next year, we can close it. Agreed? SBPR account debit to capital ledger transfer karo. He's asking from whose point of view? Nothing, from both. Right. Remuneration expenditure, just go to the thing. I mean, employee benefit expense, account debit to equity. I mean, equity in the sense, contribution from parent you can write, capital reserve you can write, other equity you can write. End of that, it should go to equity. Equity means reserves and surplus. Which reserve standard will never tell. We in the practice create capital reserve. 100% you are right. Okay, na? Right. Second year also, number will change. 81 employees ko vested na. That's all. One more journal entry if you want. I mean, what do you record? What do you record, my dear? Yeah, equity account debit to capital reserve. I mean, contribution from parent to capital reserve ko transfer karo. Yeah. Contribution from parent to capital reserve. Anything different, my dear? Not different. Look at the next question, 14th, 15th also, my dear. Read it. Yeah, parent, that is P, grants 30 shares to employees of each subsidiary. Company yes. Subsidiary company is company yes, on condition that employee should remain employed for the 3 years, assuming that at the outset and at the end of the year 1 and 2, it is expected that all employees will remain employed. I mean, will remain employed for all the 3 years. But at the end of the 3rd year, none of the employees have left. Okay, good only. The fair value of the shares grant is equal to 5 rupees per share. Right. Company S agrees to reimburse the company P over the term of arrangement for 75% of the final expenses recognized by company S. Underline that point. Something new to you, correct? Na? Nothing great. What is he saying, Nana? We will give back money to parent company, correct? Yes or no? Company S agree to reimburse to company P over the term of arrangement for 75% of the total expense. Correct. What would be accounting treatment? You will pay money to them. Means to the extent of 25% it is free for me. Correct. Now to the extent of 75% is not free, wherein I have paid. Agree or not? I paid cash. Yeah. So employee benefit expense account debit to your contribution. I mean capital reserve will go to 25%. Payable will go 75%. A payable later you pay to subsidy, whoever you pay. It's a liability to pay. Agree or not? That's all. Yeah. Your employee benefit expense 5,000 rupees came. This is cash, bank, payable also you write, whatever pending. That is nothing but 75%, and free for you is 25%, which is capital reserve or contribution from the pay, whatever. Free thing is capital reserve, balance is paid or payable. Agree? Yeah. Yeah. In the same way, other company also, what do they record? Their investment is 25%. Remaining is cash, you got it for the issue of shares. Agree? That's it. Just run through once this at a later point of time. Okay, we are left with another 2-3 topics. They just take a break and come back. We'll finish, and we decided to enter into Ind AS 19, employee benefit expenses. Yes. See, second situation which we discussed, it's there in the, what is the page number? 40, 30. Yeah. Situation number 2. Subsidiary is providing rights to its employees to get the equity shares of what? Parent. I mean either will purchase it or whether will get it and give it. Yeah. Just observe here. Subsidiary has an obligation to settle. Yes, I am responsible by giving equity instruments of the parent to employees. Yeah, in this case, generally subsidiary has to buy the shares from the open market, or it has to get it from the parent at free of cost. As subsidiary has an obligation to settle, yeah, we can say subsidiary is cash settled SBP. You have to buy using the cash. Correct, no? Right. And if parent is not giving anything, then parent go, no journal entry. Right. Can you continue this few lines in your notebook? They never asked a question in this. There is no question in ICA material also in this. But keep it. Suddenly a surprise of 4 marks can come, not more than the E questions. You can't expect 6 marks, 8 marks. Maximum 3 to 4 marks he can ask. The correct na? How can he give 8 marks? Impossible. Right. Better make a note. Yeah. Say here within this, what do you say? Subsidiary should purchase. Situation number 2, have you written? Yeah, he heading also you write it. Subsidiary provides right to employees to get equity instruments of parent. Equity instruments of parent. Yeah. And forgot, today evening we'll discuss AS2, that is Ind AS2, inventory valuation. Yeah, 100% same, no difference. But if you want to attend, you can attend. Got my point? Yeah. Have they shared that 20 and 16? Have you checked by any chance? Okay, they'll ensure yesterday's class and all, Ind AS 20, Ind AS 16. We have completed actually, 2 standards completed. What is government grants? Next is PPE. 100% same. Okay, some bits will be there. I mean, maybe 5 minutes discussion, 10-minute discussion will be something new to you. Which are all new, which is relevant, I'll discuss it. Ind AS 38 is intangible assets. Intangible assets I thought of doing in the class. Morning only I'll do it. Okay, yeah, because say example barter system is there. Never asked question, but barter system one time if I do na, adhe same thing is for PPE, same thing is for 40 also. Investment property also what, land and building. Correct. Now accounting is cost model. So some interlinking is there. That's why I wanted to do 38 in the classroom. Let's see that. Fine. Yeah. So today evening discussion will be on AS2, that is Ind AS2. Fine. Yeah. Whoever possible, please attend. Right. You wrote the heading now? Yeah. Say example. Now you write. Subsidiary buying from the open market. Subsidiary buying the shares of parent. Subsidiary buying shares of parent or parent shares in the open market. In the open market. Yeah, hyphen. What do you say? Payable in other assets. Payable or settle in other assets. Correct? No? Other assets means shares of other company. That's all. Hence, cash settled SBP. Hence, cash settled SBP. Yes. Yeah. What is the journal entry record, my dear? Goods or services or employee benefit expenses account debit. Goods or services or employee benefit expenses account debit. Employee benefit expense account debit to SBPL. Correct. Next in the books of holding, hyphen no journal entry. In the books of holding, hyphen no journal entry. Yeah. One more small heading, subheading within situation number 2. What is that? Received shares from parent and distributed to employees. Received shares. Received shares from parent and distributed to employees. Received shares from parent and distributed to employees. Okay, yeah. Subsidiary books. What do you record? Subsidiary books hyphen equity settled, you write. Equity settled as there is no cost. As there is no cost. No cost to the company. Journal entry will be same. I mean, goods or service or employee benefit expense account debit to capital reserve. Okay. And books of parent companies, that is also same. Investment in subsidiary account debit to capital. Yeah, just see this here. Everything is explained here. We orally also we spoke already. Situation number 3, Nanna. Parents settle the transaction by paying the cash value to employees, which is issued by the subsidiary. Read the line. Parent will give what to employees? Cash. Cash. Correct, na? Alright. Subsidiary will give what? Nothing. So subsidiary books mein what is it? Equity ya? Equity settled da? Cash settled da? Yes, equity settled SBP. Done. Next. What about the parent company books? Correct. Cash settled SBP. That's it. Remaining matter is given there that you can run through. Correct na? Nothing. Great. Hello. You just write there. I mean, small, simple words. Ade matter. Nutshell. In summary, are 2 lines. Somewhere you accommodate. In the text itself, you write no problem. Give some half page gap if you want to write at the later point of time. Fill it. Yeah. Situation 4. This is also same like similar thing. Eh? See, it may happen like this. Observe one minute. Group is there. Correct na? Parent company. Small thing. Nothing great. Parent company. We have subsidiary 1. We have subsidiary 2. We have subsidiary 3. Okay, 3 companies I have. You, Mr. X. Correct na? I will tell you. Arey, you have to be with the group 3 years. Kya bola? With the group 3 years. Means, what is the meaning here? You can be in one company 1 year, another company half year, another company 1.5 years, something like that. Wherever, don't jump out of the group. Outside the group, don't go. Work within our group. Then you are entitled for the SBP. I will give you, don't worry. Parent company is telling I will give you. Be within the group, either with me or with my subsidiaries. Still you are entitled for. Hello, understood? In this case, say example, simple thing. Yeah, just think, just reasonably think. No great knowledge, not at all required. S1 company mein 1 year I worked. Correct? 1 year I worked. Then what S1 company will record? Employee benefit expenses account debit to capital contributions BPR account later. Correct? First SBPR, later capital reserve account ko credit karo. But to the extent of 1 year services, I will account. Parent to will record all the 3 years. Whether I will work with S1 na, S2 na, S3 na or parent company. Hello, correct? Parent company will book every year, but how many years I worked with whom, that company will book that number of, proportionately they will be booking it. Are you getting my point? That's all. That is about situation number 4. Got it? That's it. This is the matter. Yeah. Now, we are through with the standard whatever they have given. One more reload option, something is there, which I was about to tell you. Yeah, reload feature, just listen here. Yeah, reload feature, matter I have given in the textbook. You just write reload and page number, refer something you tell. Explanation, I'll give it to you. Sufficient. Matter is already given in the notes. Yeah, reload feature. Yeah, simple thing, Nana. Reload feature. This is a feature, this may be given by the company. Every company may give, every company may not give. That is depends on that company rules and regulations. Correct? Yeah. This is more suitable. It is suitable for what? It is suitable for cash settled. It is suitable for cash settled. Just observe, understanding is important. One shot may you will get. Yeah. Cash settled means what should I give you? Company should give you what? Cash or other assets. Correct? Cash. Let's take it. Yeah, say I gave you 3 years vesting period. Vesting period is equal to 3 years. Afterwards, correct? Now, afterwards, say example, 6 months of 1 year time I gave. 1 year time exercise period. Exercise. Yeah. Any day you come. Correct? Now, any day you come. Give off. I mean, what do you say? Settle it. That day share price I will see. If there is any exercise price, I will cut it. remaining amount take cash. That's all. Your job, I mean, with respect to SBP, our transaction closed. Hello, understood? Right. The point is what? Say example. Okay, exercise price is equal to 0 ले लो यार. कुछ problem नहीं. 0 means share price कितना है? That amount I am supposed to give you immediately. Hello, correct? Exercise price is 0. Suppose one Mr. X has gone here on April 2nd or 3rd he went. Someday he went during the exercise period. That day share price is equal to 525 rupees. He felt, this is already 52 week high. Where it will go up? Correct na? Sorry, 525 rupees is sufficient. Let me close it. Correct na? He settled it. He settled it in the sense, suppose he is eligible for 1000 shares. 525 into 1000. Go to company. Correct na? Sign the paper. Get the money. And your job is done. His fate is bad. Bad in the sense what happened after he did na? Right. It went to 650. Now, you know burning sensation? That you will feel. Correct now. What you will feel? Abba. Correct, no, bad luck. I gave it off. Then, correct now. All of you will experience. Once you sell the share, share value will go up. Correct now. We will feel like as if we are only hurdle for the share value. We came out of it and then share value gone up. Right. It's okay. That happens all the time. Everybody will experience. That is market. It's okay. Here our bad luck. That's all. 650. Isn't it a... Got it? Right. Somebody, correct. Another person, what can happen? 650 hai na? It will go up. Yaar. Wait. That also will happen or not? Correct na? This fella waited. It went to 450 last day. Last day anyhow you have to settle it. 450 only you will get. Problem is there. We know that some people will be getting less money, some people will be getting more money, and it's very difficult to judge what will happen in the future. So you have to, that depending upon your fate, luck and whatever, you have to just go and close it. Any day you have to close it. What company gives? Reload feature means what? Reload. Reload means what? Gun may one more bullet you will put reload na. Ade reload exactly. First you shoot whatever you want. Okay, now I'll tell you. Suppose one fellow went on 525. Settled. Settled means what he got, my dear? 525 E number. Say 1000 options for that guy. 525 into 1000 money he will take and close it. Now again reload. Reload means one more time SBP starts for him. Hello, what will start for him? One time. Reload option only one time, not for full. Every day no reloading. Okay na? Only one time. Means what will happen? Suppose this goes to 650 Nanda. What it will happen? 650. Now again he can come. Now what will he get? 650 minus you already got 525 no Nanda. Number into 1000 shares, 1000 options. E number again take it. Your job is over. Have you understood? Right. Suppose, sir, my bad luck, it went to 450. Don't exercise option. Keep quiet now. Option, no, this is for you. If you want to exercise, exercise. Don't want to exercise, don't exercise. Correct. Now, 450, they will not give. You have to pay. Correct. Now, actually, you don't pay. They don't ask you from you. You understood my point? That's all a reload option means. Reload feature. You understood? What is happening here? Tell me. Last settlement price will become exercise price for the next time. SBP. It's like once you settle it, one more SBP is getting created immediately. Are you getting my point? Which is vested already. Once you settle it, immediately one more SBP will be created. Correct? Right. In this case, what is exercise price? Last settlement price will become exercise price. Hello, what did I say? Tell me, repeat karo. Last settlement price will become exercise price. That means you have to pay how much? 525. But why giving 525, taking 650? Balance only give it to me, na? 650 minus 525 will be given by the company to you. Have you understood? You have got totally 2 times settlement choice is there if the reload facility is being given. Hello, understood? Sir, okay. Situation understood. Accounting kaisa karenge, sir? That is also there, no? Then here any vesting period is there? Immediately vested. First SBP what you gave 3 years before, this is closed here. Once this guy settles, closed. Correct, na? The date of settlement, you are creating a new SBP. Correct, na? Now again, a fresh fair market value of that new SBP, you have to record it, immediately charge it to P&L. Fresh fair market value, you have to create it and settle it. And it will become cash settled only. Again, on the date of settlement, remeasurement takes place. That's all. No. Vested, I told, na. Immediately vested. No condition. Correct, you can, but correct, you have to be there with the entity, na. Yeah, be with me, na, for 1 year also, na. Indirectly, I am holding you also, no. That's all. You are with me for 4 years then, not 3 years actually. Agree, yeah? You are technical head. You are good, I mean, knowledgeable. You are good to my company. I wanted to hold for 3 years. By thinking this way, you are there with me 4 years. I am happy. What am I paying? A balance of 75 only, na? Okay. Agree or not? Yeah, it's okay. I wanted to hold you. That's all. But rarely you will see practically. Practically, mostly equity settled SBP. Or cancellation, they'll do it last minute. Depends company to company. But rarely you will see. But have you understood, na? It will be treated as a new SBP. New SBP. Reload feature will be considered new. Once you settle the old SBP, account for the new SBP. Like where there is no vesting condition, no vesting period, immediately vested. Then entire expenditure will be booked on the spot. That's it. That is the one small point. None. One more point is there. This point, can you write like reload feature? Let's go to the, have I given some data here? Before cash settle, which is page number 24. Okay, before cash settled, I must have given. Where is it? Cancellation here. Yeah. 24, down. Yeah, here. Reload feature. Example also I gave, my dear. Everything is given, nothing is missed out from here. Okay, you can read. Just you write na reload feature, page refer, page 24, something like that. If you write one heading like that, na, you will not miss reading. That's all my point. Otherwise, nothing. Yeah. See, first adoption, there is one small point. First adoption. Listen, all of you. This is relevant. First adoption of what? First adoption of Ind AS. Practically, first time, I mean, you may get very less chances in the practical life. Less chances. Not no chance. Less chances. Because all big companies already converged. Already following Ind AS. But there may be growing companies whose net worth is 220 in the current year. Maybe next year 230 crore aa sakta. Then Ind AS will be applicable for them. Like that. Companies who will be become big also na later. Those companies ko follow karna padega. Correct na? Right. That's all. And some companies may be right now individual company. Amalgamations, mergers will take place. What will happen? Then to put together it will become big. Then Ind AS may be applicable to you. So exam purpose also required, practical purpose also required, but practically less chance of looking at. Okay, right. It's good thing. First adoption, first time in the life you are entering into Ind AS. So far you are following accounting standard. Correct na? I gap you are following. Right. So what is that? Do you remember already, my dear? Are you supposed to prepare 3 years balance sheet? Day 1 I told you. First adoption. Under 4 circumstances totally, you are supposed to prepare third balance sheet. One is first adoption. Second is restatement of financial statements, retrospective restatement of financial statement. Next, reclassification, retrospective application of accounting policy. Correct? Right. The third balance sheet is mandatory. Just imagine, small thing. 31st March 2022. I prepared under IGAP. Okay. Afterwards, I'll allow you to copy. IGAP prepared. Today my net worth. Today my net worth is equal to 260 crore rupees. Cross ho gaya. Hello, correct? Crossed. That means Ind AS applicable from which date? Ind AS applies from which date? Last year, no. Last year it was not 250. Below 250 crores. Ind AS applies from 1/4/2022. Next day means your preparation of balance sheet will come on 31st March 23. Correct na? Right. Now look at 31st March 23. What you prepare is Ind AS. But comparative will become what? 31st March 22. 22 means what you prepared in the past? AS. But now when I am following Ind AS, I can't give one column number Ind AS, another column number AS na? Hello? Yes. So this also, what are you supposed to do? Are you supposed to restate it or not? Restate to what? Ind AS. Because you followed AS here, AS number, you are supposed to restate it. That's all, sir. Not that's all, sir. 1/4/2021, that is the opening balance sheet. Opening balance sheet of the previous year. That is the third balance sheet. Are you supposed to provide? This also, how are you supposed to do? This also you are supposed to restate it. Actually speaking, first adoption may how to restate things na? Not only for 1/4/2021. As if from the birth of your company, date of incorporation, say, if you had followed Ind AS, have you understood? Kya bola? From the date of incorporation, say, if you had followed Ind AS, what would have been the number? Our number should come to 1/4/2021. Hello, understood? Means everything retrospective you should do. It's going to be huge exercise, na? Agree or not? Huge exercise. That's the reason. Since it is very huge exercise, they gave some exemptions to you. They don't want to scare all of us. Okay, they want to give some exemptions. What exemptions are? Strictly speaking, 1/4/21 number should be, if you had followed from the birth, you have to bring it. But out of those things, few items ko छोड़ दो. Right? Retrospect में इतना दूर नहीं चाहिए. Take as on 1/4/21 number ले लो, छोड़ दो. I mean, close it. Somehow, what do you say? Some benefits are being given to you. Some benefits in the sense, don't go to date of birth, they say till date. Hello, understood? Some exemptions are voluntary optional exemptions. Some exemptions are mandatory exemptions. What did I say? Some exemptions are voluntary. If you want to take it. Don't want to take it, don't take. Don't want to take means what? Retrospectively do it fully. Your choice. But some options are mandatory. Your choice is done. Everybody must take it. Everybody must take it. Got my point? Now, first adoption means transition date we call. What is that we call? Transition. Which day are you transiting to Ind AS actually? 1/4/22 na 21 na? 21 actually. Presentation way, you are giving the first number in the life Ind AS number, you are giving 1/4/21 number. Hello? Which number am I giving? 1/4. E date is called date of transition. Date of transition. Important, very, very, very important. You have to remember this date. This is not 1/4/2022. This is first time previous year opening balance sheet. Date is date of transition. Remember, mandatorily. Okay. E date. I mean, you have to assume from the big. I mean, few exemptions I told you, na. What is the few exemptions I told you? Some exemptions will be optional. Some exemptions will be correct. If you look at Ind AS 101, everywhere as on date of transition, as of date on transition, date of transition only they'll talk. Okay, so everything is referred to 1/4/2021. Sorry, 1/4/21. Fine, right. Now, which standard have we completed so far? SBP completed. Correct. Situation can be like this. What? Before 1/4/21, I have issued a plan. SBP. Correct. Now, I must have accounted as per IGAP. Still vesting period is going on. Hello, correct? As per IGAP, I must have followed historical cost, not the fair market value of the options or something. Correct? Now, as per Ind AS, to fair market value of option karna padega. So, what is my position now? I am in the middle now. Situation 1. Situation number 2. Practically think. Practically what? Vesting period completed. Vesting period completed. Exercise period is there. Exercise period time में 1/4/21 आ गया. Hello. Now what to do? Shall I do restatement or shall I forget about it? You understood? Company already issued. Vesting period is going on. Situation 1. Second situation, vesting period completed. It's already vested, but shares are not yet given or people have not yet exercised it. Exercise period is going on. As on which date? Our discussion will be always as on date of transition. Date of transition means opening balance sheet date ka previous year opening balance sheet date. Now listen. In this case, what is the suggestion given? By suggestion, actually optional exemptions they have given. Yeah, optional exemption. Situation number 1. Situation number 1. Listen. What is that, ma? Vesting period going on. Vesting period going on. Okay, na? Yeah, vesting period going on. In the sense, not vested yet. Not vested. Not vested till date of transition. DOT, I'll write. Date of transition. In this case, my dear, you don't have any exemption. Retrospectively, you have to do it. What are you supposed to do? Retrospective. Nothing doing. Retrospective application. Yeah, retrospective application only. Mandatorily, you have to do retrospective application. You must have followed what? IGAP. Correct. Now what are you supposed to follow? Right. Is it only on 1/4/2021 or when you actually issued the plan? When you actually issued the plan, from that day to till date, you have to account for. No exemptions. Correct. No exemptions. No exemptions applicable. Right. Situation number 2. Yeah, situation number 2. It is vested. Okay, but not exercised. But not exercised. Yeah, these things, what do you say? Ignore it. You can ignore. You can ignore in the sense what? You already must have created SBPR and etc. is closed in. Right. Now, when they exercise it, whatever journal entry you want to record it. But no going back and recording at fair market value, not required. Right. Here, you can ignore. That means no fair market value must. No fair market value. No retrospective. I mean to say no retrospective application. No retrospective application. Have you understood? This is the matter. What is a simple thing they told? Ind AS E information, where is it explained? Is it under 102 or 101? 101, not under 102. 101 mein explanation is given. For each standard, explanation is given. Okay, na? That is the matter. 101 mein what did they say? If it is already vested, sir, you can ignore it. They don't, strictly speaking, they don't need to follow. Okay, sir, it is still going on. Vesting period is going on. It is not yet vested. They don't have a choice. Let them get the valuation of date of grant date valuation, fair market value of option should be done. Yes, if they have accounted for as per Ind AS 102, what would have been the balance as on 1/4/2021? That balances only should appear in the balance sheet. Okay, that is the small exemption information with respect to first adoption of share-based payment situation. You can ignore in the sense it's only vested already, correct? Na? Already vested in the sense what is pending? Exercise pending, correct? Na? You will be issuing the share. SBPR account debit to equity share capital, you have to record it. You are not booking any new expenditure. No employee benefit expense will go. Are you booking new expenses or are you just settling the transaction? Settling. Settlement means what will happen? Suppose you issue the shares. What will happen? SBPR account debit to equity share capital security premium. But are you booking any expense? Booking expenditure is already over. That's all. If something is not, lapsed, SBPR account debit to retained earnings, it will go off. That's all. That is same as per Ind AS or AS. It's anyhow vested before the date of transition. I don't need to care about it. You don't need to go back and account for everything now. Forget about it. If it is not vested, you have to go back and do it. One more small point, maybe relevant or irrelevant, relevant everywhere, relevant, right? Point number one, listen. Suppose Nanna, this is actually related to Ind AS 8. Ind AS 8 mein, what is that I taught you? Error. Correct. Error ko what did I say? Retrospective restatement I taught you. Hello? Do you remember? Yeah, what are you supposed to do? Retrospective restatement. Retrospective restatement means go to respective year, correct it and come back as if error never took place. Hello? Hey, you remember? Huh? Right. So, error comma no exemption, my dear. No exemption. If you have done any error in your IGAP only, got it my point? No exemption. You have to go back and correct it and come back. That's all. If you have done error in the past, error came out after I started following Ind AS. Error done in AS, found in Ind AS period. No exemption. Retrospectively, you should do as per Ind AS. That's all. Hello? Clear? Huh? Right. Recently, one RTP question is there in this, actually linked with 101. I would have done it on 101 also, but let me close it off. Where should I? ICA material kahan pe hai? Recent RTP November 22 na. 1 second, sorry. Recent RTP में beautifully linked, correctly speaking. Ind AS 101, 102, 8. 3 standards link करके दे दिया. Good sum, not difficult sum, but you should remember all the 3. Then it works. Answering is easy if you know the subject. If you don't know the subject, obviously any day difficult. Yeah, chalo. Look at the matter, my dear. With a lot of patience, you read it. Lot of patience required. RTP November 20. I'll give you this. This is all. I told you, if you remember, some 10 to 15 pages matter I'll give now. This also will be one. Have they linked 101? First adoption, first of all. And it is with respect to SBP. And was there an error? What error? They were supposed, at least they should have followed Ind AS 8 properly. Sorry, AS properly. IAS also they didn't account. Agree na? If you did not do, that is a proper error. Proper error, I cannot keep quiet and leave it. I have to retrospect. Actually speaking, yes, look at once again. You must have read it, I know, but second time reading is always better. On 1st April, we granted, this is 2001, we granted 1,20,000 share options to its employee, that is 80 plus 40. Different timings. Vesting date is different. One is vesting on 2002, next is vesting little later. Yeah, here only 1 year vesting period, here 4 years vesting period. Fine, no problem. That's what, correct. Now 1 to 5 is 4 years only. Each option can be converted into one share. Fine. The fair value option on the grant date is the grant date 20 rupees. Information is given. Now, the company is required to prepare financial statements in Ind AS in the financial year ending 31st March 2004. Hello, correct? First time. 31st March, first balance sheet it's coming. Hello, correct? First balance sheet is 31st March 2004 means current year is equal to 31st March 2004. Previous year is equal to 2003. Previous year opening balance sheet is equal to 2, right, correct na? That is equal to 1/4/2002 will be date of transition, correct? Date of transition. Hello, correct? Till this okay? Correct. Now, alright, this one 31st March 2002 though, this is already vested. Is it vested or to be vested? Vested. 1 year only, 1 year completed. Yeah, this is to be vested. It is not completed. It's going to be vested after date of transition. After date of transition. Hello, correct? Right. Actually speaking, vested ko, what you can do? I don't want to follow Ind AS 102. Can you say that? You can say that normally if you had accounted as for AS at least. If you had accounted as per AS, you would have told that it's okay, I'm taking exemption. For this, do you have any exemption? There is no exemption. Now look at, the entity has disclosed publicly at fair value of both these equity shares not determined in the measurement date as defined by, that's okay. That's a disclosure as per 102. The previous applicable gap, that is AS, the entity had not adopted intrinsic value method. Intrinsic value means on the date of grant, share value minus exercise price will be allocated. Okay, that is Dabba method. We don't, in Ind AS we don't follow. Ind AS always fair value method. Okay, next, share options have not been yet exercised by the employees. Okay, exercising is not done, vested to completed. How the share based payment should be reflected in the books of Newson as on 31st March 2004, assuming the entity has erred by not passing any journal entry in the aforementioned books on the grant date. They did the mistake. Correct na? They did not follow Indian gap, also not followed, nothing they followed. So now as on 31st March 1/4/2002, what is the position? This is date of transition. Are you supposed to record as per Ind AS? Yes, mandatorily as per Ind AS. Yeah, Ind AS 102. I told you for errors, no exemption. Means retrospective application, retrospective restatement is must. Right. Now listen carefully. What is the grant date fair value? It is equity settled SBP. Grant date fair value, how much he gave? 20, I think. Correct? Right. Just a small thing. I'll give solution also later to you. Ma. Understand and close it. Right. Tell me, Nana. First, 80,000 wala is already vested, na? Hello, 80,000 wala vested. You are on which date? First of all, tell me. 1/4/2002. 1/4/2002. Do you have P&L or do you have balance sheet only? Yeah? Only balance sheet. Correct? Right. So SBP1 I can say. First SBP, right? It's fully vested. Fully vested means what is the entry? Employee benefit expense account debit to SBPR. But here employee benefit expense cannot be written because you don't have P&L only. Hello? Correct. That's why what are you supposed to record? Retained earnings account debit to SBPR. Hello, understood? How many options, my dear friend? 80,000. And each option how much? 20. That's all. Whatever comes, 16 lakh. Yeah, 16 lakh rupees is with respect to SBP1. If you had followed day 1, you would have recorded this journal entry only, na? Hello? It would have come to 1/4/2021. Iday balance would have come. Now, come to SBP2, my dear. SBP2. It is SBP2 anyhow you have to follow. Correct? Tell me 1/4/2000, 1/4/2002. How much expenditure I should have booked? 1 year expenditure I should have booked. Period already completed 1 year. Hello, correct? Period already completed. So what is the journal entry? Same. Retained earnings account debit to SBPR. But number how much? 40,000 into 20 into 1/4. Correct? E number. Just calculate how much. 10,000. I think 2 lakh. 2 lakh, 2 lakh. Got it? Now, SBP2 related 2002-2003 financial year. That is previous year for me. Correct? Previous year already completed, no? Right. You didn't pass any journal entry. Now, anyhow, I have to pass the journal entry. What do you record now? Employee benefit expense account debit to SBPR. Because you are preparing the P&L for 2-3. 3-4 also you will prepare. Correct? That means another 2 lakh rupees will come. Here number of employees changing options, no information is given. 2 lakh, 2 lakh, 2 lakh, 2 lakh. 40,000 into 20 is equal to 8 lakh. 8 lakh will be allocated to 2 lakh rupees for 4 years. The beautiful question. Linked with 8, 101, 102. You should be remembering the error concept. You should be remembering the 101 ka transition concept and SBP ka concept. Correct na? Then you will be able to do this. But this level question, seriously, they should have asked such kind of, no, they didn't ask. It's still in RTP. RTP mein aaya to wait for your round. Don't underestimate. Correct na? You never know ma. Suddenly current year RTP question may come, last year RTP question also can come. Got it? Yeah, it's better to be ready. I will give you this information along with the answer question, everything I'll give you. Because which are good questions, na, I already picked it. I just need to put it in one proper paper and give it to you. It will happen in some time. Right. Chalo, anyhow, that's it. This is the one point which I wanted to tell you. Okay, right. So 101 over with respect to 102. 101 over with respect to 102. Right. Chalo. Now let me at least enter into Ind AS. Yeah, Ind AS 19. Employee benefits. Employee benefits. A beautiful standard and examination point of view. 3 attempts may 1 or 2 will come. At least 4 attempts may 50% chance. 50%. Yeah, you did not write, no? Where I have written here? In the text. Here, no? Is there? Oh, no. God shares from where I wrote here. 1 second. I think yes. Textbook में towards the sorry. No, 1 second. RTP छोड़ दो. This one only, yeah? Yeah. Yes, please take down. Ind AS 8 है तो retrospective में. One more thing. Ind AS 23 we discuss in the no exemption. Ind AS 23 no exemption. In the sense, I forgot to capitalize. I did not do wrong capitalization. I did nothing doing. Go back and record it. That's why I didn't discuss there. It's okay. You write Ind AS 23 borrowing cost. Borrowing cost. Right. No exemption. No exemption. Right. No exemption means must account for retrospectively. Why ma this has a big challenge actually, you know. You must have taken loan 4 years before. That time coupon rate you must have accounted for all these years. Correct or not? But effective rate of interest is as per Ind AS. No exemption. Mandatorily go back and come back. Okay. 109 also majorly no exemption. 109 financial instrument. Exemptions are given, those are useless exemptions. Okay. Right. You write self note, refer RTP question in the additional material provided in red color pen. Refer RTP question in the additional material provided.